Namaste, welcome to Arthneeti, where we discuss money and money matters to help you in your everyday investing decisions. I am Dr. Shifalika Gokhale. I hold a PhD in business practices of mutual fund houses. These videos are part of the investor awareness initiative of Samyak FinServe. Yesterday, the US Federal Reserve announced a rate cut of 50 basis points. Now, this is the first time that a rate cut cycle has been embarked upon in the US economy after the COVID 19 hit. This has been one of their longest rate hike cycles in history of their economy. In this video, we will discuss what this rate cut means, how it will affect the US economy. Secondly, how it will affect the world economy. Why should a US Fed rate cut affect economies around the world? What will be the impact on the Indian economy, on the Indian stock markets? And lastly, what is of utmost importance to us? How do we as investors respond to this rate cut today and in the near future? So, let us start this video. Firstly, let us understand why the central banks resort to a rate hike in the first place and then reduce it subsequently. See, the target is never to reduce in one direction or to increase in the other direction. It is always a balancing act. Now, in case of US Fed, the benchmark inflation target was set at 2%. When the inflation was at an all time high, the US Fed started a rate hike cycle. With this rate hike, what happened was excess liquidity, excess cash, which was available in the economy, which was furthering the inflation, making it higher, was sucked up. Now, once the inflation started to tame, started to cool off, started to near the target of 2%, the US Fed decided to embark on a rate cut cycle. So it is always a balancing act. The rates do not go in one direction. They are always either hiked or reduced to keep inflation at that target which is set, at that benchmark which is decided. Now, once the rate cut cycle is embarked upon, what happens is money is available in the economy at cheap rates. So, loans, mortgages will be available to people and companies at reduced rates. So, it is a welcome sign, right? If you get your loan at a reduced rate, it is always welcome, and people will start taking loans. Companies will start borrowing more money. It also has an effect on the fixed deposit rates. When the borrowing cost is reduced, fixed deposit rates are also correspondingly reduced. See, understand from a bank's point of view. When you borrow money from a bank, it is their earning. But when you keep a fixed deposit in a bank, it is a cost, it is a liability to them. So when their earnings reduce, they will also reduce their cost. So a rate cut results in reduction of borrowing cost as well as reduction of fixed deposit rates. Fed rates impact the value of US dollar as well. Once the Fed starts reducing the rates, the value of the dollar also starts to go down. Why is that the case? See, once interest rates are reduced by the central bank, the interest rates on dollar backed investments and securities also tend to go down. This makes them less attractive for investors from around the world. The demand for dollar starts to come down, impacting its rate. Understood? Now, when the dollar rate reduces, gold becomes more attractive. Why is that the case? See, gold is priced in US dollars. Now, when the value of US dollar reduces, gold becomes cheaper to buy. That is why the demand for gold rises when US Fed cuts rates. So, Federal Reserve rates are directly proportional with the US dollar. Once Fed Reserve rates come down, US dollar valuation also starts to reduce and inversely proportional to gold. US Fed rate cut, gold prices, gold, the demand for gold is becomes higher. Easy to understand. A decision of change in the interest rates in the US will have impact around the globe. Why is that the case? Understand, US dollar is the reserve currency to the world. Many emerging market economies borrow money, take loans in terms of US dollars. So they have to repay those loans, pay interest on them also in US dollar terms. Now, when the interest rates in the US change, there will be a change in the borrowing cost on loans for these economies as well. That is why a change in the interest rates in the US has a global effect. Let us understand how a Fed rate cut impacts debt or bond market as well as equity market. Now, understand it is in a very simple terms. I'll try to explain. When the US Federal Reserve reduces the interest rates, what happens is existing bonds available in the market become more attractive. Why? Because they are available at a higher interest rates. So their demand increases, consequently increasing their price. The new bonds which are issued after the rate cut is announced will give a lower interest rates, therefore their demand is on a lower side. Now with higher prices, the yield on bonds reduces. What happens is, even though the yield reduces, investors will benefit from capital appreciation because of increased prices of those bonds. Simple to understand, correct? Exactly the reverse happens when the central bank take a decision of rise in the interest rates. So bond markets, long term bond markets, will have a positive impact of this Federal Reserve rate cut. What will happen? What is the impact of this rate cut on the fixed deposit rates? Well, they have a direct impact of these rate cuts. When the central bank reduces rates, fixed deposit rates also try to replicate that reduction. So fixed deposit rates are reduced. Conversely, when central banks rise rates, fixed deposit rates also tend to go up. What will be the impact on the equity markets? Well, since the borrowing for companies and people becomes more attractive, it will give more cash in the hands of the people in the economy. This will have a positive impact on the economy, thereby having a similar positive impact on the stock markets of the country. Coming to the most important segment of this video, how will all this impact the Indian markets? What should we as Indian investors, how should we respond to this Fed rate cut decision? Firstly, the Reserve Bank of India has not taken any decision on rate cuts as yet. Historically, it is seen that once the US Fed takes a decision on its interest rates, RBI follows suit. The next monetary policy committee meeting is going to be held in the first week of October. It will be like whatever decision is taken by the RBI monetary policy committee meeting will have an impact on the Indian markets. But a US Fed rate cut will have a positive impact on the Indian markets. It has already been announced in the US that this is not the only rate cut that they will resort to in this financial year. There will be one more rate cut before this year comes to an end. So if this rate cut cycle follows in 2025 as well, which is what is expected, funds will flow in the emerging market, thereby being a big positive for the stock markets in India. If the monetary policy MPC takes a decision to start a rate cut cycle in India, right now is a good time for investors who want steady return, who look at fixed deposits as an investment option for steady returns to invest their money before the end of September. Many banks have announced that the current rate, which are on a higher side, the current FD rates, which are on a higher side, will be reviewed after 30th September before the MPC meeting. So if you want to take advantage of higher rates and lock in your funds for a fixed income earning, this is the time to do so. Long duration bond funds, especially for investors looking for less riskier options, is a good investment in this current scenario. When it comes to equity mutual funds, investing in large cap funds where funds are invested in companies with large capital base and fairly good valuations, is also going to have a positive impact on your investment portfolio once the rate cut cycle starts in India as well. So, lastly, it is always good to take advantage of such situations, but keeping your portfolio diversified is what gives you the best return and hedges your risk against uncertainties and volatilities in the market. So, I hope this video has helped you decide on the strategy following these rate cuts and the rate cuts that will happen in India. Any questions that you have on the topic, please feel free to comment below the video and I will be happy to help you. Please like, follow, and share my video for maximum benefit of investors like you and me. And see you soon in the next video. Until then, stay safe. Goodbye.